Well, folks, do we have a lot to discuss in this video here today? And I mean a whole lot, okay? We got to talk about some massive breaking news, some stuff out of Jamie Dimon, some really bad news, in my opinion, in regards to one of my stocks we got to discuss in this video. We got to discuss what's going on in the markets, what's going on with stocks, and how all this stuff affects other things, okay? And so, yeah, it's going to be an action-packed video. A lot to give my opinion on in this one. Hope you guys enjoy it, as always, okay? Now, first thing is, Jamie Dimon, oh boy, I was not thinking I'd get this headline today. Jamie Dimon says, brace yourself for an economic hurricane caused by the Fed and the situation, okay? Now, wait a minute. Just like a week or two ago, Jamie Dimon was saying, economy was strong, consumers' balance sheets were strong. This was at Davos. I think it was a week or two ago, right? Bank of America CEO said the same thing. Then all of a sudden, to get this headline out of nowhere from the most respected banker on Wall Street, Jamie Dimon, right, was out of nowhere. And this obviously freaked the market out. The market was going to have a great day today. And I mean a great day. Futures are looking great. Market opened really good. And then this headline hit and the whole thing fell to pieces. And the reason being is, this is such a big sentiment shift here that's going on that essentially it causes a lot of folks on Wall Street to absolutely panic, obviously, right? There are two main factors that Dimon's worried. So-called quantitative tightening, or QT, is scheduled to begin this month and will ramp $95 billion a month in reduced bond holdings. The other large factor worrying Dimon is obviously the situation and its impact on commodities, including food and fuel. Oil could hit $150 to $175 a barrel, he's saying. Holy smokers, that ain't no jokers. Especially if you're talking about $175. I don't even want to know what gas prices are going to be if it's at $175. He says, quote, "You better brace yourself," Dimon told a room full of analysts and investors. JP Morgan is bracing ourselves, and we're going to be very conservative with our balance sheet. When, banks start talking about being very conservative with their balance sheet, that basically means they're not taking on much risk at all, and they're scared, okay? And, if we saw something in the Great Recession, right, if we want to call it great, what did you notice? In that situation, banks stopped taking risks. They really couldn't take risk, right? And even loan activity slowed down, to a grinding halt, essentially, for like a year or two. And, the banks, that's just the situation that they had to be in. And so seeing that Jamie Dimon is essentially saying this now is very worrisome for the entire stock market. And it's something that absolutely freaks the stock market out in a massive, massive way, right? Now, then this news comes out. This is a stock I personally own. It's probably maybe my 8th or 9th biggest investment is Meta, okay, FB. And Facebook parent, Meta CEO Sheryl Sandberg is stepping down. Sheryl Sandberg stepping down from COO at Meta, and she's been there since 2008. She's been the number 2, only behind Zuckerberg, and so that's not good news. There's no way to sugarcoat that. And obviously, at some point, Sheryl Sandberg was going to leave the company, right? And she's very outspoken on women's rights and a lot of different things that I think she wants to have her, use her time for, right? I mean, being the COO of Meta, you want to talk about that's a full life. You're dedicating your life to that position. Just bottom line, like, you don't have any free time to do this or do that. You're constantly on the clock. You're constantly working. You're constantly worrying about what's going on, right? And so, to be fair, if she wants to do anything else, there's going to be no time for that. Like that's not like you clock out. You work your 40 hours a week and you clock out position. That's you are working every minute of every day. There's no such thing as holidays. There's no such thing as anything. You always got problems, and at a company as big as Meta, they're always going to have problems. That's the thing. It's like once they get past, whatever slew of problems they have in front of themselves at that moment, there's another set of problems coming. And so it never ends. It's like this bicycle you're on that you just keep pedaling forever and ever, right? And so, to be fair, I can understand, why she's been in that role for a long time. It's a very important role, one of the most important of any public company in the world, and she's stepping away. So I understand it. I would rather it not be the situation. As somebody that's a shareholder of this company, I would love for her to stay on board, but people move on, and that is what it is. So now it's really going to be the Zuckerberg show more than ever, because, Javier is going to technically be the number 2 at the company, but I feel like there's not really going to be a true number two now. Like that was a different relationship that Zuckerberg and Sandberg had. And so really this is going to be the Zuckerberg show now. And wherever this company goes moving forward is really going to be on the back of his shoulders. And, I know he's got some crap in the past, but the man's made some pretty darn good deals, and especially obviously the one for Instagram. And he's obviously betting a lot of FB's future on the metaverse. And a lot of people can't see it right now, right? And we'll see. I'm pretty optimistic about that. I just think a lot of times people want it to play out right now, and that's not going to play out right now. Like that's a play over the next 5, 10, 15 years. And so if there's somebody that could pull it off and be very successful in the metaverse, it's Zuckerberg. When you look at what he's done at that company and the amount of users they have on their different platforms and things like that, and how well they've been able to fend off competition and how much stuff they've had to go through over time. It's been pretty darn amazing. But at the end of the day, I wish Sandberg was staying on. She will stay on through the fall time to make sure the transition's smooth. She's also going to stay on as on the board of directors. So so that's kind of that situation. Am I still going to buy Meta stock now? That's a big question, right? Am I still going to buy this stock now that Sandberg's going to be leaving the company? And the answer is yes. I will still be buying. As long as Meta shares are under 200, I'm still a buyer of that stock. Under 200, I'm a buyer of the stock. Above 200, I'm more than likely just a holder at that moment, right? And as far as being a seller of Meta would have to be like $700 for me to sell. So I'm not even, that's not even one of those stocks I even conceive of potentially selling, okay? Now, more bad news. If we didn't already have enough, mortgage rates are going back up again. And like I've stated many times, I think by the end of this summer, we're going to be at 6 to 7% on an average 30-year, which is going to be a disaster for the real estate market. I mean, an absolute disaster. The 30-year just jumped on Tuesday to 5.47%, and this is after Monday was at 5.36. So, I mean, that's a huge move in a day, and a flip and flapjack in a day. Dude, that's an insane move in mortgage rates. And so the bottom line is here with mortgage rates is this is, that situation is not going to get better in any substantial way for probably all of 22, maybe 23 if the 10-year calms down and maybe the Fed stops raising rates. If you have a bunch of different factors, then maybe in 23, mortgage rates can start to chill and maybe come down. But it seems like at least in 22, the mortgage rates are not going to go anywhere but up, just to be quite honest. And even as real estate's going to get devastated, in my opinion, I think home sales are going to dry up massively over the summer. I think new build construction in terms of new orders coming in, that's going to dry up like it's nobody's business this summer. And so when I look at real estate, it's an ugly situation. It's an ugly picture, and it's not going to be good for the economy. That's the main trouble. I live in markets like obviously Vegas is a main, where I mainly live here in Vegas, right? I also live part-time in Phoenix. I spend some time there because I got a house over there, and I see the construction and I see the amount of jobs that are created from the real estate industry. And I can go around my neighborhood and just, I went for a walk in the middle of the day the other day and just saw like how many workers, how many different companies were working on these homes being built. And I just don't think those new home orders are going to be there in 23. I really don't. And so that's going to be bad. That's going to be bad. And so that's just very unfortunate. It is part of the game. And real estate's been in a pretty darn good place. To be honest, real estate's been in a pretty good place for about a decade now. Since about 2012, real estate's been pretty darn good, right? Things bottomed out in 2011. And since then, we've had a pretty good market. And even during Rona, we had a very good real estate market. And that's why all these home orders have come in. And I think those good days are going to be behind us for a bit. And I don't know when real estate will get good again. My guess would be maybe 2024, 2025. But I think we got some... I almost know for certain we have a lot of pain ahead when it comes to real estate. And that's not going to be good for the economy, nor will it be good for the overall vibes of the stock market, obviously, okay? Now, damn, I got a lot of bad news for you guys here today. Bitcoin, Ethereum are obviously skyrocketing down. That is one of my favorite expressions, skyrocketing down. So in all seriousness, when it comes to kind of Bitcoin and Ethereum, these are the two biggest kind of like proxies for risk on. And if those babies are going down, like, it's just clear people don't want to take risk, right? Now, there's some discussion about something happened with another crypto and it's affecting these cryptos. But nonetheless, whenever you see those babies going down, it's just a risk-off move, right? And so I believe part of the reason Bitcoin and Ethereum are down is just, when you see comments like from Jamie Dimon there, I think people just get scared and they're just kind of like risk off. And you got to understand, Bitcoin's way bigger nowadays than back in the day when it was just some random retail folks held that, right? Some people with some $100,000 type net worths or, $500,000 type net worths, so the guy that has $10,000 to his name. This Bitcoin and Ethereum, now there's a lot of big money in that, institutional money, fund money even, that's kind of like on the DL, I'll just leave it like that, okay? And so this is a situation now that when that sells off, it's not necessarily Joe who's got a tenth of a Bitcoin selling. It's a lot of times it's big money, and that's how you can get these moves like that, right? And so when you see that, just understand the market's in a risk off moment, and we'll see kind of what happens there. Bitcoin, I gotta say, Bitcoin's been fairly resilient, despite everything that's gone on. I've actually been really impressed. It had the one day after the whole Luna situation where it fell down to like 25.5, but since then it came back, and considering how scary the market is, I've actually been fairly impressed, and we'll see if it continues to perform, decent, but I've actually been, surprised, I guess you can say. Now, if we're talking risk off, Cathie Wood stocks aren't going to be in a good place. And Coinbase is almost like a leveraged, it almost acts like it's a leverage play on Bitcoin, Ethereum price. You see those down 6% and coins down 12%. And if you want to talk about the next level of leverage, MSTR is like the 3x, 4x leverage of Bitcoin, essentially. Like, that's the way these things act, right? But obviously, when you're talking about a situation that's risk off, ARK's not going to do good in that. It's just bottom line. Like, ARK's not going to do good. And you look at ARK here today, down way worse than the stock market was down. Stock market was even down close to 3%, 3.6%. And their ARK was down 3.6%. And her stock's just absolutely getting torn up, Cathie Wood stocks, right? And so, that's just, when you risk off, it's not going to do well. If you look at big tech here today, look at how kind of these played out. The ones that are seen as the riskiest of the plays did the worst, and then you kind of got the mids there, and then you got the least risky. We're going to talk about Amazon in just a moment because there's something big going on at Amazon I got to show you guys. But it's almost like exactly how you would expect it. Like, that's exactly how you would expect big tech to perform on a day like today, right? If you go ahead and look at Chewy Stock, this stock after hours just reported a surprise profit, and the stock is up over 20% for Chewy. The stock has been devastated, including, pretty much hitting right around lows here today. But, when it comes to Chewy, great day for the stock, at least as far as after hours go. And, this is just kind of like something important to see, because there's a lot of these unprofitable companies, right? And some of these companies, aren't going to reach profitability, or if they are, it's going to be quite a while from now. But for the ones that are going to hit profitability, that's game changer for a lot of these company stock prices. And then if you can come in with a surprise profit, regardless of the market you're in, you're going to see some massive upward pressure in your stock price. And for some of these stocks that are maybe heavily shorted, I'm not putting Chewy necessarily into that category, but for the ones that all of a sudden will come through with like a surprise profit here and there on a GAAP basis or a non-GAAP basis, when they come through with that, and if you have simultaneously had that stock be ultra shorted, the moves you'll see in some of those stocks prices will make 21% look like a joke, to be honest. Okay. And so, just interesting to kind of see that. And, I think it's important to sometimes remember in a very downer market like we've been in this entire year that, it is possible for stocks to go up, okay, and report some good news every once in a while. Now, travel stocks continue to be hit in a major way. The reason being is, obviously, if you pay attention to the oil price, it's not in a good place, right? It just continues to go up and up and up. That's what is seen as bad for travel. If fuel costs go up, that hurts the airlines. If gasoline prices go up, that hurts the consumer. The consumer is maybe not as likely to travel, and so obviously you just got all these worries on top of each other, essentially. And you see these stocks just have a bad day like today. Now, the interesting thing about the travel stocks is, don't matter what, things are still far better for these companies, even with high gas prices and high fuel prices. Things are still far better for these companies today than they were a year and a half ago. And so I think that's an important thing to remember when sometimes you see some of these stock prices at such low prices. And I'm not playing any of these travel stocks. But it is tempting, I'll be honest. It is tempting. But when you see these travel stocks trading the way they're trading, you do have to remember that it used to be far worse for these companies. And even if we're in a recession, all these Carnival Cruise Line, Royal Caribbean, Norwegian, they'd much rather us be in a recession and be able to operate their business in a recession than you aren't allowed to even sail, right? So no matter what, for these companies, they've already seen the worst. The worst is your business is completely shut down. You have no customers. Everything from there is better. And even if you have a recession, that's still better. And even if you have high fuel prices, that's still better. So they have seen literally the worst. It gets no worse than having your business shut down completely. Okay? That's bottom. When you have zero revenue, there's no worse than that. And when you have to pay all these employees and things like that, when you have no money coming in, that is rock bottom. And so that is just, I want everybody to understand that, that cares anything about these sorts of travel stocks, right? Now, we got other problems. Elon Musk. Man, I don't know what Elon Musk, he's done such a great job running his personal brand over the past, 10, 20 years. He really has. He's done an amazing job. I remember, seeing him in Iron Man 2 back in the day. It was at a movie that came out in 2010, 2011. And he's just done a hell of a job building a great personal brand that a lot of people really loved Elon Musk, right? And it seems like recently, and I think there's an ulterior motive here in my personal opinion, but he's like throwing his brand away essentially between all the controversy and stuff he's getting into lately. And it's just like, he sends out this letter and, it's just, I don't know if he understands like the way people view him now, because the way people view Elon Musk now, this is the richest guy in the world. And so if he sends some threatening letter to his workers, all it looks like is the richest guy in the world's telling his workers, you better do this, do that. And it's not a good look, right? And when I saw this, I was like, he's going to have to be roasted by the people. There's no way, I just saw this and I'm like, they're going to attack him full blow. And sure enough, working alongside them is tweeting working now. Homie is playing a video game, mismanaging a corporate takeover, crap posting, and playing with crypto 80 hours a week. Total dedication to the job. Wow, Tesla sure sounds like a great place to work and not toxic or an environment where employees are scared of management at all. He wants to reduce the headcount without layoffs. This is how. I don't know what's going on with Elon, but I know it's not good. I know it's not good for Tesla's brand. I know it's not good for, Tesla stock price. He's I don't know what he's doing, man. I'll just be honest with you. I don't know what the man's doing. I have an opinion on what I think is going on, but the thing is, when it comes to Tesla, this affects more than just Tesla stock, because Tesla is almost seen as like the Bitcoin of the stock market. What Bitcoin is to crypto, Tesla is that to the stock market, right? It's that holy grail stock. And when Tesla's not doing good, it gives it an overall very negative feeling around the stock market nowadays. And when Tesla's doing great, it's like, makes the whole stock market kind of feel euphoric. And, what I think is likely going on here, in my personal opinion, on this whole Elon Musk situation, I think orders coming in are likely pretty weak. And I think also Tesla's simultaneously dealing with this Chinese mess with the Chinese government and what they've done in Shanghai. And I'm hearing like things are starting to open back up over there, but still it's a mess. And so I almost feel like Elon Musk is trying to distract from all that. So all of a sudden it's like, oh, I'm, in this political party now, and oh, I'm going to buy Twitter and I'm going to do this. I feel like he's playing a distraction game here, because I think orders coming in for Teslas are likely going to weaken. And as the economy gets worse, I think it's going to weaken, even more so. Never mind that, you add on like the brand reputation being hurt and things like that. Because Elon's always been seen as the cool guy. He really was. Like as a CEO, he was seen as the cool guy for the longest flipping flapjack in time. And I don't know how many people that used to look at him as a cool guy is still looking at that with all the questionable things he's done over the past 3 to 6 months, essentially. And it's a long list of them. So overall, it kind of is what it is. That's all I'll say about it. It is what it is. The one good thing going for Tesla is people aren't going to forget like how expensive gas prices are. And I think a lot of consumers, when they do go to buy their next car, it might not be right now, but it might be in 2 years from now or 4 years from now. But I think when a lot of consumers go to buy their next car, I think a lot of people are going to strongly consider an EV, not just because they're cool, not just because they're good cars and things like that, but I think ultimately because they're going to remember paying $5 plus at the pump and the pain of that. And they're going to remember, man, electric cars are a whole lot cheaper than paying $5, $6. Some people are talking about $7 a gallon for gas. This is going to be etched in people's minds for a long time. And I think it's going to be overall a bigger push for EVs long term. But the problem is those consumers that are really being hurt, those are the same consumers that don't have $50,000 to go buy a Model 3 right now or a Model Y or something like that. So it will be a little more of a delayed purchase, but it is a long-term benefit for Tesla, and don't ever forget that, okay? Now, we want to talk about one stock that, it's like a freight train coming through right now, and that's Amazon. This is a stock that is just, it's had its best run in like 7 years, the best like 5-day run in 7 years, I was just reading. And essentially, you might be wondering, what is going on with Amazon that this stock is just absolutely tearing it up right now, right? Well, and also volume. Look at the volume. 6.2 million shares traded today, 4.2 is the normal volume, right? Well, when it comes to Amazon, they got a 20-for-1 split coming up here. And so everybody's playing this split. Now, a lot of people assume this is just retail playing this split. And it's like retail investors trying to trade this Amazon split. It goes way beyond that, especially when it comes to $1 trillion plus market cap like Amazon. This is Wall Street playing this. If you think Wall Street doesn't want a piece of this action, absolutely they do. Now, the question is, when does a rug pull happen? And I know it's funny to talk about a rug pull in the Amazon stock, right? But I think that's what a lot of people are looking at. And it might happen the day before the split on Friday. It might happen, the day of the split on Monday. We'll see what happens with that. What I do know is Amazon's a great long-term value, whether you're buying at 2K, 2,400, 1,700, 2,700, like it doesn't matter. Like Amazon's a great long-term buy. But in terms of short-term, maybe it pushes for another day or two, but I wouldn't be surprised, especially if we had any weakness in the market, if it falls back down, because then all this excitement around the split is ended as of Monday, essentially. So that's why I don't even get tied up into all that. Oh, let me try to play this split and get in and out. And, it's like, tough game to play. That's all I'll say about that, guys. So anyways, hope you enjoyed today's video. As always, much love. I appreciate you guys joining me. Also, if you're looking to join my private Discord chat where we talk about stocks all the time and get access to everything that's in the private group, everything like that, if you want to basically apply to become a member, check out the pinned comment down there. Much love and have a great day.